Today, we'll be discussing everything sovereign wealth fund, from their investment priorities, such as ESG and China in particular, to real estate and how they fared in the pandemic, as well as the findings of Invesco's latest report. We have with us from Invesco, Josette Rizk, the Director of Institutional Clients for the Middle East and Africa. With substantial experience in the sovereign wealth fund space, she's going to talk about all of these topics as well as Invesco's latest reports. Welcome, Josette.
Thank you very much, Riaz. It's a pleasure to be here, and thank you for your time today. It is actually a great honor for me to share with you the findings of Invesco's ninth annual sovereign and central banks study. So for this year, what we've done, we surveyed around 141 institutions between sovereign and central banks, covering 19 trillion in assets, or 19 trillion USD in assets globally.
That is not a small number.
And it's always substantial allocations, and we've been growing this number across the years, so it's been growing steadily. I think we've started around half of this number when we started this conversation 9 years ago, and we've been steadily growing the conversations with the sovereigns and central banks globally.
Okay, now what are some of the biggest opportunities as well as challenges that are facing Middle Eastern sovereign wealth funds through 2021?
Dealing with drawdowns presented the largest challenge for 57% of Middle Eastern sovereigns, and largely as a result of two major pressures on their local economies: the stress we've witnessed by the energy prices in 2020 and earlier this year, as well as fiscal deficits. So governments did call on funding to help support their local economies and industries, and they've been very successful in doing so, but they did have to call on some of the fundings from the sovereign wealth funds in this part of the world. Now, as global economies recovers, the challenge will be to transition back to focus on delivering long-term returns for the governments. From an opportunity perspective, Middle Eastern sovereigns increased their attention towards private markets, which they view as an opportunity to deliver the long-term return they seek. 57% are increasing allocation to real estate. 43% will be increasing allocation to private equity, and 57% to infrastructure assets.
I saw in your report there was a section about climate change and particularly how it's been influencing sovereign wealth funds to prioritize ESG investments. Do you have any regional examples of this?
I can provide you also a little bit with, what we've seen across the years that we've been working on this study. Invesco study has tracked a significant increase in the incorporation of ESG principle in the sovereign and the central bank space in this region. So we've started this conversation in 2017, and in just 4 years, the proportion of respondents having incorporating ESG policies in their investment decision has grown from 46% to 64% in the sovereigns, and from 11% to 38% for the central bank, among the central banks. Now, when we spoke to them last year, the focus of sovereign and central banks was to climate-proof their investment portfolio. When we came back again this year to focus about what they've done from an ESG perspective, a number of them highlighted that climate risk is still a major concern and on their agenda, with 75% of respondents indicating that it is influencing their asset allocation, compared to 62% globally. Now, from also some of the comments that we've received from some of the sovereign wealth funds, 53% of Middle Eastern sovereign wealth funds do not believe that climate change is fully factored into the market prices. And for them, this will be a source for long-term outperformance and long-term alpha. Now, on a real estate perspective, which is a very interesting thing to see, is Middle Eastern sovereign highlighted that climate change is seen as a significant risk for their real estate portfolios. And 88% are now increasing their consideration of climate risk when making any decisions, especially long-term real estate investment decisions. So it's going to be incorporated from a risk analysis across their asset allocation.
Interesting. So the impact of climate change is being assessed in that context, then, according to different aspects of the portfolio, like
exactly.
Okay.
And even if we look regionally, a lot of the sovereign wealth fund are developing their long-term plans and trying to see how they can diversify out of being always dependent on energy prices. We have the 2030 vision in Saudi Arabia, all the work that's been done in here to diversify the economies, the investments in green technologies that we're seeing. A lot of sovereign investors in this part of the world have been deploying in green technologies. And this is going to be a long-term alpha for them. So trying to identify the winners in this space for the long term.
Now, the data shared with me for pertaining to the Middle East, of course, yours was a global report, but I was helpfully given a small summary of some Middle Eastern data points. It pointed to a high appetite for alternative investments. Now, I think there often some of our readers may not actually be well versed with. Can you just define for me what constitutes an alternative investment? And can you give some examples of this from the region?
Now, alternative investments, real estate can fall under the bucket of alternative investment, private equity. So you have illiquid alternative as well as liquid alternatives. So real estate assets, which are physical assets, do fall under alternatives. The private equity deals do fall under alternatives. Infrastructure deals, which if they are unlisted, fall under in this space. You also have some listed alternatives, which provide you with a little bit more liquidity in order to be able to go, as investors, to be able to go in and out as they see fit, which is a little bit different from the illiquid alternatives. On real estate side, you do have REITs in the infrastructure space. You do have some listed infrastructure deals. And in the private equity, we are seeing some asset owners offering some sort of a vehicle to allow access to private equity investments without having the long-term lockups that you usually have in such type of investments. Now, when it comes to the sovereign wealth fund and the growth that we have been seeing in alternatives, as you've highlighted yourself, this growth has been continuing, and it's been continuing as a way for them to diversify the portfolio. Now, when we spoke to the sovereigns and central banks, this is on the alternative side is mainly for sovereigns. And when we spoke to them this year on their asset allocation, a number of them highlighted that they are decreasing their fixed income allocation based on, the current economic environment from 34% to 30%. And the private markets are a beneficiary of the falling allocation in fixed income. And the reason is, when we've seen the collapse in fixed income yields, means some of the private market asset classes that might perform a similar risk reducing role in the portfolios became very attractive. As I've mentioned to you, real estate, private equity, infrastructure, more than 50% are planning to increase their allocation. However, we need to note that opportunities in real estate and infrastructure are often hampered by very high levels of competing capital. So a number of sovereigns in the last couple of years haven't been able to achieve the target allocation that they've wanted. So, but we do see this trend continuing for the foreseeable future.
And going back to the Invesco report, it singles out China as a very popular investment destination for the Middle East sovereign wealth funds. What I wanted to ask is that has the pandemic had any kind of impact on this interest? And What are some of the factors that have driven the high local returns coming out of China?
Um, China definitely is a very hot topic. So when we spoke to sovereign wealth fund this year in 2021 specifically, 2/3 of Middle Eastern sovereigns say that COVID-19 had made China more attractive. And the reason that they've provided us was the speed and effectiveness of the initial response to the pandemic and comparatively a strong economic recovery since then. Now, 60% of them highlighted that they are expecting to increase their allocation over the next 5 years to China. Now, when we wanted to identify what are the factors that are driving this high returns, these factors do include outlook for the strong outlook for local consumption, driven by a growing middle class, a rapid embrace of digital technologies, and specifically on the technology topic, the local technology industry in China is also viewed as an attractive source of potential long-term alpha, especially in the private market space. So we've seen this conversation accelerate. And I think a number of, in average, have an allocation around 3% in their portfolio to China. This will be increasing substantially in the next 5 years.
Just going back to what you mentioned in your earlier points about real estate investments being made by these sovereign wealth funds, what categories of real estate tend to be most popular from a sovereign wealth fund's point of view? Are they interested in investing more in sort of residential or commercial types of properties? And regionally speaking, what cities tend to be the most popular investment destinations for sovereign wealth funds from a real estate perspective?
Okay, let me address then the regional point first, and then we'll move into the sectorial focus. From a regional point of view, when we've spoken to our regional sovereign wealth funds, a home market bias remains evident. So for Middle Eastern sovereign, 57% do favor allocation to domestic cities. However, we are definitely seeing a strong trend to allocate internationally in order, in pursuit of opportunities, in order to diversify the alpha generation bucket. So when other than 57% favoring local markets, 43% are planning to increase allocation to North America. 14% are planning to increase allocation to develop APAC, and 29% to emerging Asia Pacific. So it's a diversified pool of assets across regional with a home bias for regional sovereigns. Now, looking at the most attractive sectors that will be generating the most attractive yield in the next 5 years, 71% of Middle Eastern sovereigns believe data centers will be a main focus for them, 57% residential, and 29% industrial.
Thanks. So you've just outlined the types of real estate investments these sovereign funds are making, as well as the regions in which they are focused. Although they do, as you said, have a bias towards their own markets. Okay.
They know their cities very well. They have teams on the ground. It's a way to develop their local economies. It is, in a way, most of the sovereigns will have some sort of home bias. This is the market they grew up in, so technically.
Fair enough. So, Josette, we've discussed the investment priorities of sovereign wealth funds, the factors impacting these priorities over the past year. What can you tell us about the lessons that institutional and even individual or retail investors can learn from these sovereign wealth fund moves? And you had mentioned the trends towards alternative assets. The report mentions an emphasis on cash, and you also talked about sustainability. Are there any parallels between these priorities by sovereign wealth funds and other investors?
Any investment, whether if sovereign wealth fund looks at their investment allocation, or an institutional client, or even a retail person, any investment allocation should be considered from a long-term perspective, alongside with investors' risk appetite and liquidity requirements. Now, we've seen an increase in liquidity requirements for sovereigns in 2020 and 2021, and this was specifically due to the pandemic and them having to support their local governments and local economies. So we have seen this increase. That's why liquidity requirements are a key focus for any investor. Now, asset allocation that should be diversified, similar to any sovereign bucket. Their asset allocation is diversified across a number of asset classes, and this is in order to help them sustain or weather any different market cycles. Now, we have definitely seen a shift into alternatives, with investors seeking an alternative source of income, especially with a persistent low yield environment. And it seems some of the real estate portfolios have stepped into this role and taken on the role of an income generator assets. On ESG specifically and sustainability, we are seeing definitely a growing conversation around sustainability and ESG and the risks, climate change risks. With the population becoming younger and younger, the conversation around ESG is going to accelerate. Now, it is fair to say we are still behind Europe when it comes to ESG implementation across portfolios or conversations around ESG and sustainability. But this is a journey, and we can safely say it is accelerating rapidly.
Thank you. That was a very comprehensive response. Thank you for taking the time out to speak to me today. It's been lots to learn.
Thank you so much.